A lot of businesses these days make online payments. Now, these online payments could be for subscription services, it could be for your G Suite, for custom email, it could be for advertising, it could be for access to some specific information. Also, taking a random example, it could be PayPal services that you're charged for. So, all these payments are not necessarily made through banking channels in the form of you actively making a payment to that company. It could also be in the form of a deduction made, as PayPal does, while remitting your funds to you from your customers. Now, even the deduction that PayPal makes is a payment that you're making to PayPal for its services. Now, as long as these payments are going to Indian companies, it's still easy to check the applicability of TDS under section 194C or 194J of the Income Tax Act. However, things get a little tricky when you're making such payments to entities or companies which are registered outside the domicile of India. The challenge there is that you need to be deducting TDS on these services, even if you were to pay for the same services to an entity in India, maybe TDS would not be applicable. But when you're making payments to a foreign entity, TDS is applicable under section 195 of the Income Tax Act whenever you make payments to a non-resident. There is an entire chart given on the income tax website on the various TDS rates for different kinds of payments. So if at all you're making credit card payments to a foreign entity online for access to some subscription or some other kind of database, and say the amount is $50, you've punched in your card details and you've made that $50 worth of payment. However, what about the TDS? Now, if you haven't deducted that TDS and say the TDS rate is just a random number, 20%. Now, what the income tax department assumes as per the Income Tax Act is that the payment that you've made to them is net of TDS, which essentially means you've, in a rate of 20% of TDS, you've paid them 80% only. And you do a reverse calculation of what would be the 20% then, and you have to deposit that with the income tax department as TDS. That comes as an additional cost on the pocket of a business owner or a startup founder without even them realizing it. And it normally comes to their notice at the end of the year when, say, either their auditor brings it to their notice saying that you haven't paid TDS on these charges that you've paid to foreign companies. And the person is just flabbergasted thinking, I'm making a payment online through a credit card. How am I even supposed to deduct that amount? And say for PayPal, they are deducting their charges and sending me the money. How am I supposed to deduct their TDS? For that, if these payments are substantial, you need to be speaking to the customer service rep of these companies, asking them as to how withholding taxes have to be deducted and complied with for them. If they think that the kind of business you bring to that particular company is a very low ticket size, then sorry to say, in great probability, you may have to incur that additional cost of TDS. You know, in addition to the payments you make to these companies. Now, what happens if you don't deduct TDS? If it's a foreign entity, the entire amount that you've paid to them is not allowed as an expense for computation of profit, which means that that amount is removed, that much amount is added to your profit and you're taxed on it. Also, as per TDS provisions, the income tax department may impose penalty on you, may actually charge that TDS from you again with interest. So it's not just disallowance of that expense, there are also additional penal provisions. Plus, TDS aside, whenever you're importing any service, and these kind of services or foreign payments are falling in the category of import of services, there is also an additional requirement of payment of reverse charge under GST on these kind of payments. Now, these are areas which most startups, most entrepreneurs tend to make mistakes on. It's something that their CAs don't tend to tell them about, or they realize towards the end of the year at the time of audit or at the time of due diligence. I would recommend you avoid it. Look up section 195 of the Income Tax Act. Speak to your CA about it. Also look up GST reverse charge on import of services.